I wanted to move next. We talked about the credit portion of millennials, and Mike, buying a home with bad credit can happen, but it takes some work. And I want to talk for a few minutes about, let's say there is someone out there with a 600 credit score, but they've got good income, they've got a down payment. What are things that can be done to help them, get on the path to being able to qualify for financing?
Right. Well, part of that too, if you think you can't do anything because you have a 600 credit score, for instance, there are some loan options out there that that allow for credit scores that low. So, us, for instance, we're able to do FHA and VA loans with 580 or higher credit scores. Obviously it's going to be a little bit more difficult in that credit score range, but there is that possibility. But sometimes it's really, really easy to get your scores up quickly. The most common one that I see where scores are maybe being held back, especially if you've never had any late payments or no derogatory accounts, it's usually just the utilization on your credit cards. There's huge swings that you can see with the balances on your credit scores.
I talked about that on the show before because, we obviously put a lot of business expenses on credit cards, and we pay the bill in full every month. If I check my credit score right after, in a period, like a week after the bill is paid for that month and the balance is now much lower, my credit score is way higher than if I check it before the bill's paid.
Right, I've seen 80-point swings with a credit card being maxed out to one then with a balance under 10%.
50 points a month.
Yeah,
my
it's
score
crazy.
can range 50 points.
Right, and
just based on whether I check it when I recently paid that credit card completely off, or whether it's the balance is due.
What's the ideal
it's a high balance
percentage to be at on the credit?
Right, I would, for at a minimum 50% of the credit limit, will help. I think ideally to kind of maximize your score, 10% of the balance or less. So if you got a $300 limit, try not to let your balance get over $30 a month. I know it's tough sometimes, but that's where you're going to see, the most value from that particular account.
And I think other things you can do, when talking about, credit score improvement, finding a landlord that reports your rent to credit bureaus. Which
as long as you make your payments on
Correct,
time.
yeah. not having late payments or taking care of those late payments, not missing bills. The utilization ratio that you talked about, again, another thing people can do is sometimes, so for example, and you've done this with customers before too, let's say they have a Visa account with a $10,000 credit limit, and let's say they're a few months away from buying, but they owe, $5,000 of the $10,000 on that. They can sometimes go out and get other credit cards, put nothing on them, but just have a lower utilization rate. So now they're only using 5 of 30,000 instead of 5 of 10.
Exactly.
Other things they can do is consolidating. They can consolidate some of their debt to a lower payment. If they've got a whole lot of credit card debt, maybe they can find somebody that consolidated it at a lower rate to lower their monthly payment.
Right. One thing that is helpful as well, if you're in a situation where you can't pay that credit card debt down, for instance, sometimes you can ask the creditor to raise your credit limit, which is going to make that spread better. So that's one trick. One thing that I do a lot as well is, especially someone that may have limited credit, go on someone else's account as an authorized user. I've seen big credit score jumps that way as well. If you go that route, for instance, it's always best to make sure that account you're going on has a good right, exactly. I tell everybody, find one that's been open for 2 years.
I remember hearing that tip when we, probably a few years ago when it talked about like setting your kids up for success, and I don't remember which seminar we were at, but it talked about adding your kids once they got to a certain age as a limited authorized user, but an authorized user where that actually helped their credit score. So,
exactly.
I know it's something that.
And you don't have to give that person a card too.
Correct.
So it's
as
the person that owns it.
User and cut the card.
The person that owns it, you don't have to give them a card.
Correct. So, I want to. So again, there are some things you can do to improve your credit score to help you purchase, and hopefully we've given you some of those tips. If your credit score is low, it is not the end all be all. And don't just go to one lender and say, oh, well, we can't get a loan, and think that that's the solution. Because a lot of times, Mike, I think you can testify to this, you guys have gotten people into homes and helped people qualify and put them on the right path that other lenders turn down because overlays and different things are different.
Right. Yeah, every lender has different overlays and restrictions on their loans, so just because one place can't do it doesn't mean another can't.
Right, and on the same token, there are lenders, there are private lenders out there that will loan you money. You know, the interest rate's going to be higher, but if you've got cash, there is money out there. You know, if you can prove your income, and you have some down payment money, don't give up when you just talk to one lender. You know, be diligent about talking to multiple lenders, having different people give you opinions about what you can do to improve your credit, and then also, you know, looking at private money as a source to maybe, you know, allow you to buy the home while prices are rising, right? So and buy it now. So and the way I look at it is, look, if you're going to get a hard money loan or a lender, and maybe they want to charge you, you know, 3 or 4 points above prime. If home prices are going up more than 10 points in the next year, you're still winning.
Exactly.
You know, so if we're an appreciating market, you know, and you say, oh, I'm going to wait until I can save enough money or build my credit up because I don't want to take that high of an interest rate, you're actually losing money in a lot of instances. So look at it that way. So anyway, we're going to talk next. We're going to wrap up the show with our last segment. The last segment we're going to talk about if you're a real estate investor or you're looking to buy a home. A couple of establishments that you might want to buy a home close to, because statistically, some of these businesses have shown huge swings in price, and homes around these businesses do extremely well. We'll talk about why after a quick break here on the Duncan Duo Show.